Do you ever go out to your mailbox and get a stack of mail, and in one of those letters or big envelopes is your investment statements, and it's a lot of pages and it's kind of difficult to read, and maybe you're not sure exactly what you own or why you own it or what fees you're paying or how it's performed? These are things that are extremely important. I would recommend getting a portfolio analysis done. I'm going to tell you real quick what it looks like, but it's simply like getting an X-ray of your investments to look at fees, performance, and a couple other things I'll mention. Let me show you what a portfolio analysis entails. The first thing we want to look at is what kind of fees you're paying and for the performance. So the first thing that's very important as you're going through your brokerage statement, your IRA statement, your 401k, is we want to find out what the fees are. They're not necessarily listed in your statement. You'd have to read the prospectus in order to get that information. Then another thing that's very important with investments, especially if you have mutual funds, is something called the turnover ratio. When you have money invested in mutual funds, you're taking your money and the manager or managers is taking other people's money, and you're mutually investing that money together to buy stocks and bonds. And a certain percentage of those investments or holdings are changed out every single year. Some are sold and then new ones are brought in. The amount of that trading done is called the turnover ratio. So for example, if you have a 60% turnover ratio in your mutual funds, that manager is changing out 60% of the positions each and every year. Imagine if you owned a company and you had employees and you had to change out 60 employees every year, get rid of some, and then rehire and retrain. There is an expense involved in that, and there's an expense here in the turnover ratio to you in your investments and the fees that you pay. So you want to know what the turnover ratio is. The third thing outside of fees and turnover ratio is something called duplication. This is an example of duplication. We had a couple the other day come into my office and we ran a report and audit on all their holdings. And they had about 10 or 12 mutual funds, but many of those mutual funds owned many of the exact same stocks. So there's a lot of duplication. So they own some really good stocks, like let's say it's Microsoft, or let's say it's NVIDIA, or let's say it's Amazon, or Google, or Meta, okay? All those kinds of stocks, except they own it maybe 8, 10, 12 times when that's unnecessary. You could just own a few hundred shares or a few thousand shares, and you just own it one time. You don't need to own it in a bunch of different mutual funds because there's a cost for that. We call that duplication. Here are the three main costs to people that they don't necessarily see on their statements. It's the fees that they're paying, it's the turnover ratio, and it's the duplication. So the answer to this is to run portfolio analysis, which will tell us fees with your performance, what your turnover ratio is and your duplication, and looking that in its entirety to see if what you have and what you own is working well for you or not. So if you think you might need some help and you want to know exactly what your fees and performance are, and you'd like the portfolio analysis run for you, click the link below and book your complimentary call.